A very good morning, good afternoon, and good evening to all. Myself Vaibhav. In today's session of automated trading, we will continue our work on the algorithm involving linear regression intercept and the Williams R. This is the fourth and last part of the ongoing series, and we will try to finish the whole setup and do the testing as well. We are of course utilizing Williams R and the ATR as well. Before we get started for the day, this is a standard disclaimer. Here I would like to remind that this session is simply for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithm which we will be developing during the session. Suppose if you want to use any of it, I would recommend that you do extensive testing for many months and maybe even years, and then run it on the demo account for good enough time to get a clear cut idea of the efficacy. And of course nothing in the webinar is to be constructed as an advice to trade or for any particular setup. With that, we go back to the charting to see what we are trying to achieve in today's session. So here let me okay, now much better, we have clarity. And in today's session, we will be actually building the sell side, and we want the sell trade to happen as and when the price action moves below the linear regression intercept after being in this territory which is above the linear regression intercept for at least 10 hours. So we are considering the last hourly close, and then we also take into account the Williams R values we want. There should be good enough momentum on the sell side, and only when the strong momentum is there, when during the initial hours the Williams R value is dipping in this oversold territory below -80, we want the trading to happen. And also we are going back 10 hours in time, and we are making sure that the hourly close 10 hours back was above the linear regression intercept of that point in time. So we are taking into account this situation as well. And here we will also consider the ATR for our entry and the exit purpose. So let us see what we have done so far. We have done the instrument subscription Euro USD, then we brought in the linear regression intercept values on hourly time frame, shift 1 and shift 3, and respective hourly close, historical candles, Williams R for helping us determine the strength of the trend, ATR on the hourly time frame. Then again historical candles 1 minute each for pinpointing the area of interest, the entry point. And then we have done this calculation. This is the buy point, this is the sell point, stop loss and target, and then we got 10 hours back data as well. So here it is. And then we have done this buy side. We have considered the prior hours candle close, and then we have compared it to the linear regression intercept. Then we have gone back 3 hours, and then we have compared that closing level Williams R when the momentum was entering into overbought scenario, as this is the buy side, and then the candle close 10 hours back as I explained to you. Then this is the exact entry point, and then comes the buy side trade by limit. So now is the time to try and develop the sell side. So here we are. So first thing, we have to see that last hour's closing level is below the the linear regression intercept, and for that we have to take into account the candle 21's closing level and compare it to the line 19. So we here have to take candle 21's closing level, candle close, and this is the candle close, candle 21, and we have to consider line 19. Okay, then comes candle 22, which is having shift 3, look back period is 3, and we compare it to the line 20. So we take into account candle 22's closing level and line 20, and here candle 21's close should have been less than, and the candle 22's close should have been above the line 20. That means only during the last hour the transaction is moving below the linear regression intercept, and here first input should be greater than second input. Then we have to see the linear regression intercept level 10 hours back, so we have to take the closing level of candle 44 and line 45 into account as well. So here it comes, and candle 44 closing level, it should have been above the line 45. So here it is. First input and second input. First input greater than. Okay, it was greater. Now we have to move to Williams R. Williams R levels should be entering into the oversold situation. So for that we take into account the Williams R 23 and Williams R 24. So here it is, and what we want is that Williams 23, which is having a look back period of 1, and Williams 24 shift 2. So Williams 23 should be below minus 80, first input less than second input, and it should be above minus 80. Oops. That means it was above oversold territory, and then during last hour only it has entered into a oversold territory. So now is the time to bring in the last two conditions, and then we will be almost done with our setup here, and this one should have been greater than first input, greater than second input. Now let us take this if blocks where they belong, if conditions. This is a fairly simple setup. We are only looking at three crucial indicators, and two are being used to define the condition and one for optimizing the entry and the exit. We are going in for a pending open. We are not really going in for a market open, so that way we will be placing the order below in case of buy trade and above the market price for a sell trade, and to determine the extent of how far it will be from the current tick price, we are using the hourly ATR, and then these WillR conditions which help us determine the magnitude of the underlying instrument's momentum. So here it is. Now we have to take into account the 1 minute close, and then we will be almost done. So now we have to consider candle 27 and candle 28's closing levels and compare it to the last hourly close, that is candle 21's closing level. So here what we do is we take candle 27's closing level, which is 1 minute candle of shift 1, and then candle 28's closing level, and then we have to compare these two closing levels to make sure that price was dipping below the last hourly candle close, and that is this candle 21 with shift value of 1. So here we are, and we have to take candle 21's closing level in both the blocks. Okay, so all set. Now on these conditions front, we can now bring in the pending open. So here candle 27, here I would like to explain to you. So when the trade will happen, actually when the last hourly candle close has been below the linear regression intercept, and at the same time that our Williams-R value should be dipping below minus 20, and here time is 11 GMT. That is not happening, so we turn our attention to the next hour, and 12 GMT the value is below linear regression intercept, and at 12 GMT the value is not really dipping. So in this scenario no sell trade will happen, and I think to give another example, maybe somewhere here the sell trade will happen, as we have 9 GMT, even 8 GMT the value is dipping below linear regression intercept. So the 8 GMT is here, and we have this prior close, but prior close above the linear regression intercept, but the condition that again 10 hours back the hourly candle should have closed above linear regression intercept, that is not going to be fulfilled. So even because of that trading won't take place. And coming to the 10 GMT of 16th June, 10 GMT is here. Now this time around the trade will most probably happen and the order will be placed, and our order will be almost above the last hour's candle close, and it will be equivalent of this hourly ATR. So this hourly ATR range will be added to the last hour's candle closing level, and at that level a limit sale order will be placed. So I think here also no trade will happen, as I don't really see price going to that extent. So only when we test it we will come to know. So the price should be dipping below the last hourly close. That means the immediate candle on 1 minute time frame should be below the hourly candle close, whereas the prior minutes candle was above the last hour's close. And then we have to take into account the pending open, and here this should have been greater than. Okay, so we arrange this to if conditions, and then we add hmm, so now here we have to consider this sale limit, and the price at which the order will be placed is already defined. We have already defined in our earlier session, and that is the closing level plus line 25, which is hourly ATR. So that is our sell entry point SE. Instrument remains the same. Position amount will be defined at 0.1 million. Okay, slippage 2 pips is good enough. And then we have to remove these stop loss and take profit, and we have to put in the variables which have been defined already. So this is our stop loss, for which we did the calculation earlier, and here is our target price. These are actually changed into integer format, and this will be stop loss is equal to the hourly ATR, whereas the target price is twice of the hourly ATR, and defined in integer OVT in long format. Order is going to be valid for 3 hours. Here we have defined this at 3. Okay, and TT is 3.6 million ticks. So we have defined all this. Now is the time to do the testing. So we turn our attention to the testing now. So here we save the file, which is named as June 16th, as we started working on June 16th. Yes. And then comes exporting it. We export it to a folder and then we import the same file on the JForex platform. So here is June 16. Now we have to import the same file and here is June 20 and June 16th. Okay, we got it. So here is our algorithm which we have developed in last 4 trading sessions. First we have to compile it and only after that we will be able to test it. So here is the compilation. Let us see if it has been successful. Okay, compilation successful. Now we test it. We will test it for a month, last month. And during the testing, many times the audio quality deteriorates. So I won't talk much unless I have to explain anything. Okay, so let us see. We don't have to change parameters much. And we have hard coded all these parameters. So let us run it. Testing has begun. One order was placed, but it didn't really execute. Speed of testing is good enough. So I think in 2-3 minutes time we will be done for the test of whole month. And we will have one more order was placed, but it didn't execute. And here it executed, but it has ended in loss. And now our testing continues. Okay, now this time around we have made profit. Again, order was placed and it has ended in loss. One more trade in loss. Oh no, another in loss. Okay, so here comes our test results, and here we have actually suffered loss of around $320, and 5 trades got executed, of which only one ended in profit, whereas two have ended in loss. So I think we will need to do further optimization, as well as I think we, before we make our mine, we will need to test it extensively as well, and then see what can be done to to make it more profitable. So on that note, I am signing off for the day. We will be back on Monday with a fresh setup. See you on Monday. Goodbye.